All right. Welcome to Wealth Conversations with Gaitha. My name is Gaitha, and I run a company called Regal Africa where I help people create wealth. Thank you for joining in today. I'm just going to take a few minutes because we're waiting for people to join us also on Facebook, and then we can start the conversation today. But thank you very much for joining us. All right. Thank you for joining us at World Conversations with Gaitha. I see a few people who are starting to stream in on Facebook and also others who are joining us on Zoom. Thank you for joining. And what I would say is if you can go ahead and just if you're on Facebook, just go ahead and put your name and your country where you're from so that we can be able to know where you're from. And also on the comment section, you can be able to then ask any questions because today we're going to be having a conversation about creating and global investment opportunities. I'm here with Victor Marango from Standard Investment Bank, and we'll have a really interesting conversation also about Manta X. So go ahead and just go ahead and put in your name and where you're from, and then we can start this conversation. Thank you very much. All right, I see a few people are joining us on Zoom, so we'll just take a minute or two so that we can have other people join in before we start this conversation. All right. Thank you once again. Thank you for joining Wealth Conversation with Gaitha. My name is Gaitha. I am the founder and CEO of Regal Africa Group, where we help our clients create wealth. And today we'll be talking about global investment opportunities that anyone can be able to take advantage of that. So people have been asking me why I started Wealth Conversation with Gaitha. And the reason I did that is because once COVID happened early March, a lot of people started asking, you know what, I need to start investing, or I've been investing and I really want to know how to grow and manage my wealth. And because of that, then what we did is to say, we're going to come up with an opportunity for you to have conversation, have experts on the show who can then be able to share with you their expertise and tell you where are the opportunities for you to be able to create and grow your wealth, because the opportunities are not only found locally. We are here in Nairobi, Kenya, but we do have different people from around the world who log in to hear these conversations. And so today we'll be saying outside Kenya, what opportunities are there? And we do have an expert who is available to go ahead and speak to us about that. So that again is the reason why we started this wealth conversation with Gaitha. Now, before I go into the interesting conversation we'll be having with Victor, I just want to go through what it is that we've been talking about the last couple of weeks, because today is episode 10. I'm very, very excited because when I started, I didn't know what direction this would go, but I knew that people were asking questions and people encouraged me to start this conversation with Gaitha. Today we are in episode 10 and I'm very excited because again, this is our grand finale before we take a break and then start on season 2 in regards to other conversations we'll be having around creating wealth. So for all of you who are joining in, thank you. And like I said, this is the grand finale. So any questions that you may have, go ahead and ask them because you might not have an opportunity again to ask this question. When we started, we were basically talking about what is the wealth formula? How do people create wealth? I really talked about the wealthy mindset. I talked about why people need to actually have a wealth plan. I talked about why wealth accumulation is very important, especially when you're talking about creating generation wealth. So that's the basis of actually creating wealth. But beyond that, you really need to have a strategy. What I talked about, having a wealth vision and then coming up with wealth strategies. And when you're talking about wealth strategies, you have to understand what are the asset classes that they are there, right? There are different asset classes and it depends, and where you invest depends on very many different things. It depends on how much money you're investing. It depends on your risk tolerance. So it also depends on your age. It invests on your time horizon. So there are different things that you need to think about when you decide this is the wealth strategy that I'm going to take. But the key here is about having a diversified portfolio. So don't put all your eggs in one basket. Most people usually say, I want to put money and I want to put it in, real estate, or I want to put it in equity. And then they are concentrated in one area. And when that doesn't work, then they are affected. So the thing about creating wealth and sustainable wealth that is going to be you'll be able to actually leave it for generations to come. You actually have to look at a diversified portfolio, make sure you actually are working with professionals who can advise you around that. And that is where we have Victor today to go ahead and talk to you about that. So welcome, Victor. I appreciate you for coming in. I will go ahead and just read a short bio of Victor. And so some of you can be able to actually hear or learn who he is before he comes and tells us exactly what he does at Standard Investment Bank. So Victor Maragu draws over 10 years of experience in the financial service sector with diverse expertise in investment portfolio management, learning management system, enterprise resource planning, client relationship management, and digital marketing strategy. Victor is a certified sales-enabled expert, sales and marketing management team lead, an instructional designer, sales trainer, and coach. Victor's career spans across asset management firms such as Sanlam Investments, Britam, Cyton Investment, and currently he's the head of distribution at Standard Investment Bank. So thank you again, Victor, for taking your time today to just share with us information about investing. And so before I start asking you some of these questions, maybe you can tell the people who've joined us on this wealth conversation with Gaitha, just tell them a little bit more than what was in your bio so they can understand about why you're in this career, what it is that you're doing as a young person to create wealth, and why having global wealth, global assets in your investment portfolio is very important. So welcome, Victor.
Thank you, and good evening, everybody. Like you've been told, my name is Victor. Anne has really embellished my title and all. Okay, not yet expert level per se, but I'm a continuous lifelong learner. It may shock you, my background is in analytical chemistry. So what I'm doing right now is as a result of passion and experience over the 10 years. I never practiced analytical chemistry, so I just went straight into financial services. I started with insurance, the very basic, asset management, and then into real estate. I grew into the industry, and what I've experienced over the last 10 years is I've met a diverse range of clientele, people with different investment objectives, different age sets, different walks of life. And one common objective everybody had is, how can I grow my wealth? How can I have a decent retirement? How can I have peace of mind knowing that my investment is safe? Yeah, those are the basic questions everybody asks. Nobody will have anything outside that. Some are looking at conservation. Someone towards retirement is not looking at very high risk investments. Someone who is very young is ready to take long-term investments, some are which are considered highly liquid, like in real estate. Yeah, and someone who is retiring will be looking at asset classes that can be easily liquidated, give them quick access to their funds, pay their wages, pay their bills, and things like that. So investment objectives are quite diverse. So what we're going to discuss today is we're going to narrow down on maybe 2 or 3 aspects, and the main one being diversification. And I think that has been the headache for most investors. You realize that maybe one asset class performs very well. I want to dwell in this and that. So before we proceed much, that is what actually awaits you. We are going to cover all that. Thank you.
Okay, thank you, Victor. And for some of you, the reason that I brought Victor on this show, especially on the grand finale, over time, I keep hearing people talking about Mansa X. So we'll be talking about that later on. And also because he's a young person, I really want to talk to young people around the world that whatever you age you are, as long as you're over 18 and you're starting to earn an income, it is important that you start investing. Time is your friend. And especially when you're young and maybe you don't have that much responsibility, you have the ability to take a risk. Versus when you're older, you have responsibility, you don't have the ability, or it's not wise for you to take certain risk. So that means then it limits your diversification ability. So that's why I brought Victor on, and he will be sharing more about what it is that he thinks we need to be looking at when we are talking about global investment opportunities. Another thing you talked about is diversification. So I really want to really hear more about that. Now go ahead and just start off, Victor, and ask you the first question, because you work at Standard Investment Bank, which again was licensed as the first online forex trading money manager in Kenya by the Capital Markets Authority in 2018. Can you share exactly what forex trading is, and how can an investor invest with Standard Investment Bank?
Thank you, Anne. I will start by alluding to the misconception people have had about Forex, because everybody, someone hears Forex, they just imagine currencies, exchange of currencies, and that is why it ends for most of the people. And that actually has been only one asset class. Most of the people, even here in the country, in Kenya, have lost money because of dealing with unregulated traders. And the other bit, others have pushed platforms that you can actually trade in. And trading is an art and a science. It takes time, a lot of emotional intelligence, a lot of resilience, a lot of technical research you have to conduct, technical and fundamental analysis. And most of the people have lost money because they don't know how to use those tools exactly the way supposed to be done. But there are successful people who have actually done it at individual level, but it has taken years and years of losing money, getting money, losing money, until they established their own unique. It's like the way we have your fingerprints. No one can have the same trend, in as much as market trends move in the same particular format. But how an individual is able to enter and exit trends is quite different based on their emotional intelligence levels, how well they can handle the emotions when the profits are just coming in, or when they lose. Yeah, some people are not even able to know, when do I exit or when do I enter again. So those are some of the things. Now, maybe to demystify Forex, we can basically say this is basically touted as selling of currencies, commodities, precious metals, CFDs, global stock indices, and basically global single stocks. I'm defining this in regard to what we do at SIB. You realize that some others who don't have access to this wide array of asset classes we're talking about. And by number of asset classes, if I put individual, we have over 250,000 asset classes you can actually trade in, 8,000 of which are stocks. So that is massive for an individual, one single individual, to be able actually to track that. Even an organization like Standard Investment Bank, Global Markets Division, that has got wide experience, spanning over 25 years cumulative experience, is it has to apply a lot of technical know-how, hire very expensive technicians and experts to be able to run those trades, apply AI and machine learning, and be able to trade, because you can't monitor like 250,000 assets, or you can't even enter into all of them at once, but only one given time we're able to see. Because when you look at the global markets, you can look at the US, Europe, and Asian markets, you can be able to tell where are things moving well, and where things are not doing so well. I'm looking at very high level. I don't want to get into details and get so technical. I'll just give a very good example. You know what happened with oil? Pre-COVID, I remember there was a time it was around $56 per barrel. And when travel was held and there are no more planes going out and into countries, what happened? The oil prices started dropping, and steel production was going on until there was a glut. The major refineries, the major guys who received those oil could not even receive the oil. They were actually paying people to go away with the oil, because it got the contract got to the point of settlement, and they were not able to do that. So oil went to negative 37. So at Mansa X, we saw that opportunity. And after COVID, what happens when negative? So what opportunity we saw before? If you look at Business Daily, our article we wrote on around February, we had hinted that it would go to around 20, and it went 20 and went negative 37. So someone would be wondering, then how did you make money when oil dropped? There is what we call long short position. So we took a short position on oil, and I'm going to explain probably as we move on with this kind of question. So forex trading, this gives you an exposure to global markets, and maybe to handle this during this moment, people have been used to traditional investments, and traditional investments, we're basically talking about domestic equity, that is local shares, international equity, those are global shares, taxable fixed income, tax exempt fixed income, satellite asset classes, which I'm going to explain, and cash. Basically, we talk about FDRs and all that kind of stuff. When you look at the market average of all those traditional asset classes, even as of now, TBOs are giving 6%, 7.5%. Slash inflation out of that, slash by inflation at 6%, you are left with an effective rate of around 1.5. You cannot grow your wealth like that. You need to diversify. And that's why actually the essence of this conversation we're having this evening. There are, again, alternative investments. Alternative investments have been very hard to access by individual investors because of their high minimum requirements. There are a lot of technical expertise. You need to be able to access them, to trade in them. Huge amounts of money required, becomes a bit hard. But funds have been able to take advantage of it. Example is private equity and venture capital, hedge funds, managed futures, and alternative mutual funds. This one gives you an opportunity now actually to be able to diversify the portfolio, have a balanced portfolio that, and we talk about a portfolio. When you talk considering an investment, you're looking at, first of all, the risk involved. You're looking at the return on investment. And then also you're looking at liquidity. How easily can I access my fund? Those three fundamental key fundamentals are very important. So what traditional investment give you? They give you a low return, they give you low risk, and they give you high liquidity. Therefore, you'll find it is a reserve for guys who are looking at long-term investments, for guys who are looking at maybe they are retired and they don't want to get to engage in liquid assets, Then alternative investments, again, they are considered high risk, highly liquid, and high returns. So a wise investor is able to strike a balance between the two because of correlation. When the traditional asset classes are doing so badly, the alternative investments are doing well. So that lack of correlation is what makes it very unique to have a hybrid of the two, whereby you pick particular asset classes from the traditional investments and particular asset classes from alternative investments and create a hybrid of an investment portfolio that gives you high returns, moderate risk, and high liquidity. To strike that balance requires a lot of expertise, and that's why people are always asked, go seek financial advice. Go seek financial advice. And the good thing, we have the Capital Markets Authority that has been trying to vet most of the fund managers and come up, be able to, for example, the way we got the money manager license as SIB, to trade as Mansa X and give the Kenyan investor an opportunity to participate in global markets by giving them a chance to diversify their current portfolio into global markets, because you find most of them, much of the asset classes are held with the traditional asset class, which is basically local asset classes. There was an outcry even on Business Daily about the local fund managers having to think again. Because honestly, look at, for example, pension funds. What returns are we getting from pension funds these days? What is going to happen to our pensions? Yeah. So it's high time people became innovative. You can even run your own individual pension fund by investing in a particular product. There are so many products out there. All you need to do is do a lot of due diligence, engage experts like Gaitha here. Who I'm sure she doesn't endorse products. She just gives a platform for people to be able to look at it. And then once you engage now the investors, the fund itself, you're able to get the insights, look at their fact sheets, look at since the company was formed, what transactions have they been involved in, basically a track record. And you can be able to make a good decision. So financial matters, the problem we've been having with personal financial planning is because these are things we were never taught in school. Nobody taught me how to bring up a kid. Nobody taught me how to be a husband. Yeah. So same case, nobody taught you when you get money, what do you do with it? We work for the companies, very good finance managers for the company and everything, but when you come to a personal financial planning, it becomes a nightmare. You find someone got into debt, they're struggling even to pay debt. Like their objective right now is how to get out of debt. That is what they are searching on Google, or that is what they are, yeah? It becomes, and then we're talking about depression and all that kind of stuff. Or even when you get a good opportunity, instead of using that return to do something meaningful, you realize you ended up paying the debts and then you are left at point zero. But it's advisable at least to be at point zero where you create everything you owe no one and be able to move forward. So this area of solutions we offer is to be able to enable the investor take advantage of such opportunities. Personal financial planning is very critical, and you're doing a very good job by running this kind of show and educating people on this kind of things that we never learned in school. So you realize that much of the knowledge or you use as at the moment is not what you studied in college. What does that one mean? That you can be a good investor, like Warren Buffett. Yeah, you can invest. He is we call a value investor. He doesn't invest in growth companies. He doesn't invest. For example, you may wonder, why does he invest in Tesla? Why? Because he's what you call a value investor. So value investors basically will look at mature companies whose shares are performing very well, right? Not growth investors.
Yeah. Oh, wow, Victor. I can see your child. You know, this is COVID time. We're all working from home. So that's
So,
okay. But
yeah,
Victor,
so
you said a couple of things here, right? So one of the things that really stood out was, of course, when you're talking about Forex and volatility. I can tell you, for example, I always say men and money. I see a lot of men are more open to sort of taking risk versus women and wealth. Women are more conservative, so we'll save, we'll put money into fixed income, we'll put money into land because we don't want to lose. Because again, at the end of it all, we have a lot of responsibilities. So my first question again for you is around volatility, right? And what can somebody do? And I think that ties back to what you were saying. Why you need professionals who are looking at the market, because when you have to watch the market, right? People always come to me about Forex trading and I tell them, I'm not a trader, I'm an investor. So I would not be the right person to tell you what, how to watch the market. I don't do that myself. I'm more into money market, fixed incomes, and alternative investments. I'm all about investment. So that's my specialty. Trading is not. That's you guys, you're doing that at Standard Investment Bank. But what would you talk to people who are in the audience around volatility, around the fact that you're starting to create wealth? You do not want to lose what you have until you get to a point where you have the ability to do that. What is it that someone needs to be looking at and doing to make sure that yes, they're creating wealth, yes, they're making money, and inflation is not eroding a lot of it, but also they have to mitigate the risk? What would you tell them about volatility?
What I can talk about volatility, and it's specifically for this fund, Mansa X fund that we run at SIP. The fund actually makes money when there's a lot of market volatility. That is what the fund was designed to take advantage of. Yeah, take advantage of market fluctuations, asset price fluctuations, and therefore our long short strategy comes in. For example, you have information that oil is going down. You take what you call a short position and say, I will exit when it gets to 20. If it was 56, I will exit at 20. You remember, I've made around 36 units, yeah? So it's quite complex, maybe for an individual investor to be able to do the same, because it requires a lot of several analysts who are able to be able to know, we need to take this position and exit at this particular position. There are stop losses and all that kind of stuff. So Mansa X product that we normally have at SIP, maybe someone might have to look at it maybe in the future, is basically meant to take advantage of market volatility. And there are actually, right now, lots of opportunities in trading volatile currencies, yeah? And also taking positions like in gold is very lucrative right now, yeah? For example, as Mansa X, we started, took a gold at $12.50 per ounce. 1250 USD per ounce, and that was sometimes around in January and sometimes last year. And right now we are talking about 1800 USD per ounce. Look at the difference and look at the magnitude of the fund. We are not talking about 100,000 or 1 million, 2 million. We're talking about over 1 billion Kenyan shillings. And of course, not all of it is there. Maybe 25 or 30% of that chunk is in gold, because we sought our conservative trading strategy guides us into more conservative, more safe avenues like gold, which is a universal currency and doesn't devalue very easily. If you look at the history of gold, it has always been going up. Yeah, there's no one given time that it has actually lost a lot of value, and it has really been a basis for most of the hedge funds and all that kind of stuff. So that advantage we took, yeah, and also for oil, we moved from 46 again. I said
before we go to oil, you know, you've just
I'm giving examples of volatility.
Something very interesting, Victor. Yeah. Victor, you just said something interesting about gold, and I had to cut you short, because gold globally is like real estate in Kenya, right? Where everybody says you'll never lose money in real estate. But you know, people have lost money in real estate, right? I don't know if, you know, if Standard Investment Bank does a lot of properties. So when you start saying, you know, gold has always gone up, gold has had it, you know, it's fluctuations, right? Like you say, it was at one price and now it has appreciated. So so with that, how are you? How does when you're looking at global investment and you're looking at something like gold and at Standard Investment, and you're looking at that to put that into the Mansa X fund, how do you look at that and be sure that you are going to get a really good return? Because like I say, it reminds me of, you know, say no one loses money in real estate, and people have lost money and they probably will continue to lose money because maybe the real estate they bought is like maybe not in the right location, or you know, or different fundamentals that affect that value of that asset. Maybe you want to, I don't know if you have something to say about that.
I want to take you back to real estate a little bit, then I go to gold. If you look at the Kenyan real estate, let us all agree in this audience that it is overpriced, overvalued, most of the real estate. I'll give a very good example. You've had someone give 30% discount. Yeah, 30% discount. It's in the public domain. You can search and you look at it. What does that mean? By the time they're giving the 30% discount, don't you think they're being left with margins? Or it has gotten so desperate, they just need cash flows. Just sell off whatever the price, we get back. The other problem with real estate has been uncontrolled developments. You find someone goes all the way to Narok. Narok is a very rich agricultural land. And people just go there, buy 100 acres of land and subdivide it into 8. In Nairobi, what can we do with an 8 in Narok? Yeah, and it's meant for large scale agricultural practice. Yeah. You've probably had most of the Kenyans going to Joska, Kamulu to get an 8 and everything. So what happens, because it's not controlled, someone with an 8 will put pigs there. Yeah, somebody else will put a residential. someone else puts chicken and everything. It becomes a messy affair. And what does that mean? If someone came there at that moment it's developed, they will not value it as much as they would want. However, we've seen controlled developments whereby we gated communities, for example, that have done so well. The problem with real estate investment is if you go there without knowing what is your investment objective. Am I investing to collect rental income? If I'm going to collect rental income, then am I guaranteed of occupancy? And occupancy is determined by so many factors: access to health amenities, recreation facilities, school for the kids, medical facilities, and all that kind of stuff. And because of every Kenyan has got ninunue shamba nijenge plot nianze collect rent. Everybody has that. Look at their financial goals. Even myself, every year you're doing your financial goals and all that kind of stuff.
Yes, you want rental income for sure.
A plot is always top on the list, or a piece of land. Yeah, very few will do maybe agricultural land. Yeah, and that has been the problem. I will give you an look at pipeline. Look at pipeline for real. If you go there, you say the real estate has busted, yeah? Because you're not getting actually true value for that. Because of what? Look at the infrastructure, the roads. You have to park your car somewhere near the road and then walk into a thin, dark alley to your house. And then that landlord, do you think they're having easy time with themselves? Yeah. What kind of people will they attract into that kind of residence? Look at the occupancy. People will start, when they start making it, they start moving. So those guys are never guaranteed of rental income in one given moment. Yeah. So to invest in real estate, you have to choose a developer who understands why they are doing this. There are people who came the other day and they're purporting to do real estate investments and all that. And you have to look at who is this developer? What is their track record? What are the completed projects? And how are these projects doing? How about the governance? Is it deep enough? Are there enough overwatch and all that kind of stuff? So real estate will never go anywhere anytime soon, but people will have to learn better how to invest better. Look at the advent of serviced apartments. They're doing so well. It's about innovation. Airbnb has come there, combined with Uber, all that kind of stuff. People want to rent a space within a day, do their business, and go to the next town to do their business and all that kind of stuff. And people are making money. So instead of looking at one asset class the way it used to be looked at initially, yeah, make it serviced apartments instead of doing flats and people there if they are pay monthly rent. Then puts you more overheads, caretaker, KRA comes on your neck and all those kind of things. Why don't you look at maybe doing serviced apartments that fully furnished people come there instead of, even when those foreigners come, sometimes they prefer not to even to go to hotels. They prefer to go to an Airbnb and do their business. They can cook for themselves, wash their own clothes and do that kind of stuff and then move on. It's about innovation. Now, when you talk about, okay, for real estate, please look at it from the long-term view. Look at it from the long-term view, not something you can easily liquidate or next month you're making money or you're holding it for 2 years and then you're going to sell. Every time someone wants to sell some form of real estate, all those brokers will call you and they'll say, what are we going to do this particular amount? And there's nothing you can do. You go left, right, center. And even if you bring, you bring your own buyer, by the time you convince them, yeah, and because then they have a wide access to clientele who are looking for that. You will sell it through a property agent, they will knock off something out of that, and then you realize what a mess you're entering into. So when investing in real estate, have your own, do I want to pay to it for commercial, or just want to buy it and hold it somewhere I can call mine eventually when I'm no longer working, or that's where I want to spend my retirement life. I'll build a mansion there and spend my retirement life, yeah? So don't look at it as a get-rich-quick scheme. Someone tells you, this guy owns a lot of real estate and that's why they are rich. Never. It's only one asset class. They should tell you what else they have done and get to understand, oh, so they have invested even in other asset classes, not only real estate. Yeah.
So it's never, we're never told the whole story. It's all about diversification.
Yeah.
I'm really big on real estate. I studied real estate and I've been saying there's a problem in this market and eventually it's happening. They are overvalued, as you said. And even in real estate, you really have to be understanding, are you buying to hold? Do you need cash flow? You know, are you looking at commercial, residential? Do you you want it whereby it's managed like a REIT or you're managing yourself. So there's so many things, a lot of strategies to look at. So that's very important, and I'm glad you brought it up. But because today we're talking about global investment opportunities,
Yeah,
and
basically.
I was going to go to the next question about since you are,
I'm sorry to cut you.
yes,
There was that bit of gold because I digressed a bit
oh,
from
gold, yes.
so we are able to study the markets. Our technical team is able to study the markets and able to understand, is it a buy, is it a sell, or is it, do I buy and hold based on what is happening? And then we explain why we went into gold. After COVID happened, there was a lot of demand for gold, and people started buying gold CFDs so that they can protect their wealth against fluctuations, market fluctuations. So the gold price started going up. Yeah. JP Morgan is actually predicting that it will get to 2,000 USD per ounce in very soon, because people are still not very comfortable. You see, markets react very fast even before the economy. You look at the economy and then you look at the markets, you wonder what is happening. Markets are rekindled by a very simple, tiny pulse in the economy. They react so fast. Then you see bullish markets all of a sudden, yeah? And even when the economy is doing well, you may see a bearish market based on what is predicted to happen the next 3, 4, 5 weeks or the next 5 months. Even Trump himself, the US president, can mess the market, mess your position with a simple tweet. A single tweet hitting China and you're messed, yeah? So that active portfolio management is what enables us to determine. We have a pulse on the markets, yeah? And we're able to tell, do we sell gold? You can see someone selling the entire gold holding they have, and you think they're crazy. It is depending on the investment. They say, once I get this profit level, I'm going to exit, because they are sticking with that conservative trading strategy. That is what differentiates any other trader and a portfolio manager who understands I'm not only following one asset class.
Yeah. So watch the markets, and like you said earlier, and I've been telling a lot of people, if you're not a professional, you can't be actually watching, even understanding the news, and everything that happens globally affects different companies, affects the markets. People always see me watching Bloomberg, and I'm like, what is going on here? This is going on in China, this is going on in Russia, this is going on in South Africa. And they're like, what does that mean? And I'm like, well, because if something is happening in the Middle East, then oil prices are being affected. If something is happening in the US, like you're saying, a tweet here, then okay, there's less demand. Corona is affecting industries who are trading. So all information is important. But for our audience here who are not financial experts, the reason we're having this conversation is to tell you the people who are actually running these funds, whereby it's run by a fund manager or an investment bank. This is what they're doing day in, day out. They're watching the markets. And because they're watching the markets, then they have not slightly, but a better of making better decisions than if you decided yourself, I want to go in and I want to trade oil or gold or Apple stock or whatever it is, because you will have to make so many decisions, and if you're not watching the markets, you might make a wrong move. So that is why it's important to work with professionals, and especially if they're licensed, they're regulated, like in this case by the Capital Markets Authority in Kenya. So thank you very much for that, Victor. So like I was mentioning, the next question I really had, and you've alluded to it a little bit, it's really the fact that because we are part of a global village, and really what are the best global assets one should be investing now? So someone is saying, look, I already have been investing in Kenya, I've already invested in Africa. I'm very passionate about investing in Africa because there are so many opportunities here. But if you're thinking outside your country, outside Kenya, what asset classes should people be looking at? You've alluded to gold, and you said that you want to work, people should work with a professional. But outside that, what should people be looking at to invest in?
Oh, sorry about that. Now, there is a myriad of investment opportunities one can take advantage of, not as an individual, but when you go through a fund. When you go through a fund, like Masa X, you can take advantage of Masa X. What the fund exposes you to is a wide array of investment asset classes that you can take advantage of. For example, we have exposure to currencies, major currencies like USD, Euro, USD, Pound, emerging ones, world currencies. We have the yen and the yuan. Actually, we have exposure to right now over 100 currency pairs, and because of the currency volatility, because of the currency volatility, we are able to pick good currency pairs. Our team is able to monitor good currency pairs and be able to trade in them. Yeah. The other asset class is precious metals, gold, silver, palladium. These metals, their demand varies depending on how the markets are moving, on how the economies are moving. For example, with the resumption of industrial production in China, when they put COVID under control, which I'm not so sure about, there was an upsurge in demand for these metals, because that is basically what they are using in their industries. Not specifically gold. We talk about silver and these other metals they basically use in their production. Then we talk about commodities like oil, natural gas. Just hold on a second.
All right. So as we wait for Victor to resolve his family issues, we all understand, I hope, because we're all working from home and, children will come to you. So I'll just go ahead and just talk about, I see a few people who are logging in on Facebook from outside Kenya. If you can just go ahead and put your name and where you're from and any questions. We are coming towards the end of the queue of some of the things that Victor wanted to talk about. But remember, this is a wealth conversation. You're having a conversation right now, me and Victor, but we really, really want to hear and answer questions in regards to what you want to understand about global investment opportunities. Like I mentioned, this is the grand finale. So if you have a question, this is the time to ask. Or apart from that, you'll probably have to do a one-on-one time to speak to an advisor. And again, depending on on your availability, it might be best to ask those questions right now. So like I said, if you're in the diaspora, go ahead and just ask a few questions and Victor will be able to ask. In fact, even before they ask those questions, maybe my next question for you, Victor, is for people who are in the diaspora, right? So we have Kenyans in diaspora, we have Africans in diaspora. A lot of them are looking to invest back home, right? And we've been talking about that over the last 9 episodes. But so when they are there, they might not know the opportunities that they can get either in the UK or in the US or in China or South Africa. Can they invest with you? And why should they invest with Standard Investment Bank? And what opportunities do you have for the diaspora? Maybe you can answer that.
Yeah, maybe to put it into perspective. Sorry, I and to put the boy to relax. Yeah, I was explaining about the asset classes that are available. These commodities, global stock indices, and stock indices like NASDAQ, S&P 500, FTSE, Nikkei. That's basically global stocks, yeah. And also single stocks. We are taking advantage of single stocks like Zoom. Yeah, that's the platform we're using right now. And therefore it means this is an essential service that everybody is actually using. And this one has actually replaced where I used to book a first class to go to the US, to UK to run a meeting in London or Dubai. You stay in an expensive hotel and all that kind of stuff. So someone would be wise enough to monitor a stock like this and actually buy such a stock. We are moving from fossil fuel powered vehicles to electric vehicles, and therefore you've seen Tesla do so well that it actually overdone its target for last year, that is in 2019. So those are some of the opportunities our team is able to monitor and take advantage of. Okay, we also invest in cash and cash equivalents. About Kenyans in the diaspora, we're in the process of working on a customized solution for specifically the unique position Kenyans in diaspora have and the challenges they are faced. I've seen most of my friends send money home for a construction, and when they come back, they just find a trench where there was a foundation and nothing else, yeah? Or they buy, for example, a kettle, and then they are told it's being worked on, and the animals are being fed well, and they're doing that, and they never get anything in return. Even the cows have calved, they are producing milk and everything the guys consume, and they still ask for money when the vet needs to be paid and all those kind of stuff. So we have a lot of headache from most of the Kenyan investors in the diaspora. So we are looking at an opportunity to enable them participate in markets they can actually see, which is quite transparent. They are able to understand how the markets are performing. By the time you are telling them you are taking positions of gold, they can follow that. One thing I want to advise you: do not follow the news a lot when you're making your investment decision. And that is one mistake people make. By the time it gets to the news, guys, we have already acted on it. We have already made money.
I know.
So if you want to go to Bloomberg, oh, gold is doing so well. That was a sentiment for 3-4 days ago. Yeah, they don't report it real time. If you read an article, you see this article was written 1 hour ago. And deep inside the commentary, you can hear this was a conference that was on last week on Wednesday. And the team who are actively managing the portfolio took positions. By the time you're reading the news, they're actually exiting. And they are already excited. You are entering into the market, making that asset class go high and high and high. And they reap that by the time they are getting out, you lose. Yeah, because you came in late. That is why it's important to take advantage of a fund that is actively managed. You call it active portfolio management. Yeah. So Kenyans in the diaspora, even in East Africans, you can actually invest using the PIN number for your country. That's for East Africa. We are not so certain about the international investors. It's something we're actually working so that foreigners who are foreign to Kenya can be able to take advantage of the fund. Ours is to make sure that we spread this fund into Africa. That's the focus we have for the fund. Because even the name Mansa itself, Mansa Mansa was the emperor of Mali, actually the richest man in the planet because he had a lot of gold. Yeah, you go and Google the story of Mansa, you'll understand why we call it Mansa X, and of course our sentiments on taking gold positions and all that kind of stuff, because we don't want to be like any other fund manager. We don't give you another product that you are actually used to. We want to give you a product that will give you returns above market average. Returns above market average. We couldn't be in business if you're just giving you the same returns that you are used to every other time. So that is what I would say about Kenyans in the diaspora. And if you need a KRA PIN, of course, you can apply a KRA PIN and be able to get one. You just need to apply it online. Yeah, if you don't have a KRA PIN, that's what some of the challenges are. Yeah, and because we want to tax your fund, because the returns gotten from this fund are referred to as capital gains. And there is no capital gains tax. It was abolished, in Schedule 4. It is no longer the capital gains tax. So you're able to get more effective return, because if you go to other asset classes, they'll give you 11%, then they charge you 15% of that. Yeah, and then you realize that, and then you look at inflation, you are left with something very little. Thank you.
Okay, all right. Thank you for that, Victor. It looks like we've really talked today, a lot of conversation. So just going to the audience, I see a few people joining us on Facebook. I see some people saying, hey, hello. That's Dana. Anne Louise is saying, watching you. I see a few people here. Dorcas says, thank you, Anne, for financial education. It's been great. Thank you, Dorcas, for joining in. And if you're loving this, we have other 9 episodes that we've done since March. You can actually go to our YouTube channel and see all those videos. Even on our Facebook, you can actually go ahead and watch those videos. I do see also a couple of more people joining in. And like I mentioned, if you have any questions, if you need any clarification about global investment opportunities, how do you take advantage of that, how to work with financial or professional money managers, go ahead and just ask the question. We'll be glad to assist you with that. I do also have a question here on Zoom. I see one there. She's asking, she says, hey, Anne, fantastic job you're doing. The one thing coming out clearly is unless I have the time to learn and watch the markets, I need to sign up with a financial advice. And that's correct. Maybe I'll say something before maybe Victor joins in. It is true, right? So the only time you can make good financial decisions is if you know the market. So you need to do a lot of research. You have to watch the market. You have to be very in tune So as financial professionals, we're very in tune about how this affects this, right? And so if you're busy working or running your business, you might not have the time or the ability to actually take all these considerations for you to make the right decisions. That is why we are saying you either work with a professional. That is why we advise people to sign up with a financial advisor. But the other thing is you can actually take the time to actually learn. If you do that, then then that's up to you. But what we are saying is if you do not have the time and the ability to watch the market, then that's when we advise you to work with a financial advisor. The second thing is about diversification. You might go at it alone, but unless you have a lot of money, it will be very hard for you to stretch your money to be in all these different things. But if you go with a fund, then your money and other people's money is put together, and then that way you can be able to diversify the portfolio. So that's what I wanted to say, but maybe Victor, you can add on into something so that maybe something I missed that uh, you would talk to one day and ask and share with her why you think it's good to work with a financial advisor.
That's great. Thank you, Wandai. That was a very good question, and I think you've handled it quite well. We saying what I would want to add is that you can learn and understand, not to become make it like your career or something, but at least understand what market sentiments, what are fundamentals, indicators in the economy, how does it affect, yeah? What is monetary policy, what is fiscal policy? You don't need to understand the nitty-gritties of it, yeah? You can learn. All these short courses are actually posted on online and learning platforms like Udemy. Let me tell you one thing, for example. Things you knew 2 years ago do not make sense right now. Yeah, businesses you see as the main businesses right now don't make sense because they are no longer considered essential. And don't tell me you are waiting for COVID to end so that you go back to the same story. You'll have lost it. Yeah. Look at when you're even picking a stock. Yeah. When picking a stock, me, I'll pick a stock that, for example, e-commerce business like Amazon. I'll buy stocks there because I know people have realized that I don't need to go to the mall, by the way. I don't need to go to push with people in the mall and all that kind of stuff, because let me tell you, COVID-19, we have to learn to live with it. And how do we learn to live with it? We leverage on businesses that are actually supporting us right now. Yeah, people used to spend a lot of time in nightclubs and all that kind of stuff. People have come with another way. Oh, so kanaweza shika hata nyumbani, for those who understand Swahili. So in my own house, or we can go outside, somewhere outside where there's more open space. We can do bush dinner and things like that. So things are changing. So it's about adapting and trying to understand how can I plug in and be able to invest in these ventures and be able to make money out of it based on an investment objective. And I'm sure, Anne, you've talked about personal financial planning in this forum. What are your investment objectives? Then from there, that is when you start with what are the available investment opportunities? How are they structured? What kind of returns do they give me? Do I get interest? Do I get dividends? Do I get capital gains? And after how long has they realized? Do I get to access my fund monthly, quarterly, semi-annually, annually? Once you understand all those things, how has the fund performed over the last 5 years? That way you can be able to project on the next 5 years. For example, I'll give you an example. Mansa X gave a return of 24.45% as at Q1 2020. So I know I can put my money for 4 years and I'll have basically doubled my initial investment. So with that kind of understanding, if it's real estate, if I buy a house worth 10 million, for how long will I collect rent to collect the 10 million back? Yeah, those are the kind of questions that an investor should be able to ask themselves. Thank you, Anne.
Wow, it is true. You have to ask the right questions. You have to work the numbers. Yes, 10 million shilling apartment or house giving you 50,000 Kenya shillings a month in rent. How long it take you to recuperate? And I was going to say God forbid, but what if you have a mortgage, right? So then you have the interest payments. By the time you work the numbers, it honestly sometimes doesn't really make sense in that particular investment, unless you're doing it for sentimental reasons, like you own a house and you live there or different things like that. But from an investment perspective, the numbers don't make sense. Now, again, remember, this is all about helping everyone to make the right decisions. Everyone wants to make money. Everybody
Yeah.
wants to know, what do I need to do? So my last question for you before I let you go, Victor, is
Yeah.
what do you think? What do you think is the next big thing in investing, in your opinion? What's the next big thing?
So in my opinion, based on actually based on the research and what is so obvious to everybody right now, any investor will look at the next big thing actually be online shopping, this e-commerce stocks such as Amazon. We're also talking about video conferencing firms like this video streaming services. We are talking about Netflix. We are talking about Zoom. Yeah. Battery manufacturers, because we are going green. Yeah. We need to run away from fossil fuel. So electric vehicles will require to be powered. Smart homes will require to be powered. Go read more about Elon Musk and Tesla and what they are doing about green energy. So that's a stock I would definitely want to track. I'll be crazy even if if look at companies like Eveready, you know, I would want to see are they diversifying, how innovative are they in coming up with, because we need power storage, how are they coming up with innovative solutions like that. And I will observe is if I see them moving or forming partnerships in that direction, I'll pick that stock very fast because I know it will be the next big thing. Yeah, how innovative are they? What are other startups that are actually supporting and making our life much easier even during COVID-19? That is why I would be actually very careful on. Yeah, if you look at the hospitality industry, do you want to invest in an industry that actually gets adversely affected, especially when times like this? Do you want to put your entire package there? You want to put your entire investment there? Yeah. So even those people who have invested in hospitality, they have invested in other supporting services so that even there is no room occupancy, there are other services they are able to offer. If people are not coming to board, maybe they're doing conferencing facilities. Yeah. But at a time like this, it's a bit hard. People are doing it from the comfort of their house. Unless it's daytime where you are, maybe you're in an office somewhere, but you're in your own house. But here, you didn't have to pay to go to the conference. Yeah, you didn't have to pay to go to a masterclass to learn personal financial planning. Even in learning and development, I consult a lot of LID systems, learning management systems, and all that kind of stuff. If you look at the way adults learn, adults cannot be kept for a 2-day seminar. The whole day, they forget everything. That day when they drink, celebrating what happened during the weekend, by Monday, formatted, zero. They go back to their old ways, yeah? But when you use e-learning, an instructor sits there, gives you materials to go through, and then they're able to create your own learning path, because everybody has got their unique ways of learning according to those learning principles. Somebody is able to know how they are progressing in that particular career path or learning path they are taking. So learning paths are created and they are called self-paced. Yeah, self-paced learning. You learn at your own pace. Go to platforms like Udemy, Coursera. Major universities are actually joining us with Coursera and Sailor.org to be able to offer credit. Someone goes through 8 hours of content at your own time and you get college credits. So it's about what can I do online? Take advantage of technology. There are people out there, for example, who are very good in particular fields, but they think they only need to be employed at a university to become a lecturer to train that. Go to Udemy, go to Thinkific. You start your own academy there online. You need a laptop and a microphone and lights, and you're good. And you proceed, and people start buying your courses. Even when you're retired, people still be subscribing to those courses because you're training something that people really need to understand. Things like personal financial planning. I've not seen a true school for personal financial planning that gives you worksheets and how you're able to track as a single person, a single established young family, established family, empty nest, like when you are left, you and your husband or you and your wife alone in the house. How do you do about that? Do you become a Buddha to your daughter and son when they are old, or they always look back to coming to mom and dad because they know they'll get something? When we talk about estate planning and things like that. So you can be able to take advantage of so many opportunities that are being presented by advancement in technology, and don't be afraid of technology. Yeah, there are people who are self-taught in so many.
Technology is your friend. Technology,
Yeah,
technology.
yeah, exactly. Don't be afraid.
Yeah,
Yeah, just always
yeah.
venture. Buy books on Amazon, Kindle. It's on your phone. You can read. You don't have to go to a library anymore. From the comfort of your phone, You have books costing you 1,100. Yeah, simple, and you can be able to learn something you didn't know. If you want to understand about Forex, go buy a book about Forex trading. Learn, understand what are the dynamics, what happens there. Is it something I can do? So that even when someone is explaining, you're not looking blonde. What is that? What is that? And you still want to put your money somewhere you don't even understand how it operates. So it's very important to be able to learn. Marketers will tell you, I'm in charge of marketing, head of sales and marketing. And for us, we want to get market share. We will always come with all those kind of messages to give you information and condition you into making that decision. But I can assure you, as a financial advisor, I have a portfolio of about 6.8 B with my clients who have engaged with transactions that I've engaged since 2010 May when I joined the insurance industry up to now. And even now, some of them cannot even make a decision to buy a car without asking me, what do you think about this one? Is it a ripoff or what is it? Yeah. So do you have a trusted advisor, someone you run to every time? Have they made good decisions every time, or sometimes they have messed you and you still want to make another decision based on what they told you? What has changed this time? Yeah, it's very important. That's why it gets so personal. Me, I normally talk about human-to-human interaction. Do you understand my pain point? So is your solution coming to help me solve my pain point, or you just want to come and grow your fund and just leave me there as part of your fund, and I'm not getting anything? I'm always happy when our clients are receiving their statements every 3 months and they're just topping up. I've seen the fund really grow, top ups during COVID-19 when I expected people would actually come and withdraw their fund. They're actually topping up. Yeah, so it's very important to engage someone who knows what they're doing. Yeah, who has actually heavily invested. Yeah. Thank you, Anne.
I agree. I always say, even as you get all the information, even as you get advisors, you want to get the right kind of advisors who are looking out for you. But also, you need to know what is it you want to do, where do you want to go, because that's quite important. I know, Victor, you mentioned that you've not heard of anyone who's doing personal finance management. I can tell you, we do that at Regal Africa. We have the Wealth School where we talk about creating wealth masterclasses. This we are doing for free. Because I really thought that this was very important for people to get this information. But at Regal Africa, we do that. We do that for businesses in regards to creating generation wealth. We talk to families especially. We have an 8-step process where we talk all the way from understanding your financial assets to estate planning, to asset protection, to investment accumulation, to tax planning, because people don't understand about the incentives they can get for tax benefits that they can get. So again, we do that at Regal Africa. So for any of you guys who didn't know, we do that at Regal Africa. We're really big on helping people create wealth, be it through your business, through individuals. In fact, when I started Wealth Conversation with Gaitha, I said there were 3 things that I wanted people to take out. And since this is our grand finale, I'm just going to go ahead and state it, because this is something that I really, really wanted everyone who hears what we have to say on this show to do. One is to get wealth knowledge. So today we're really talking about global investment opportunities. You've understood, if I want to access gold, if I want to access the US market, if I want to understand about oil and commodities, if I don't know how to do that, I can go to a professional like Standard Investment Bank, or you can come to us and we can, share that information with you and connect you to the professionals who manage these funds. So the first thing was wealth knowledge. It's very, very important, right? You might not know all of it, but you have to be able to ask the right questions for you. The second thing was, I said everyone needs to have a wealth vision. I said people cannot get where they need to go unless they see it, unless you have a plan. This is where I am. This is where I want to go. I want to buy a house. I want to retire in 10 years. If you don't have those things, a plan, then it's very hard for you to be able to become successful. So out of this wealth conversation with Gaitha, I hope that all of you put together a wealth plan that will enable you to actually create wealth. One of the things that we do at Regal Africa, there are 2 things we do. One, we came up with the wealth book, e-work book, which is basically a do-it-yourself e-work book, where you go through the 8-step process, really understanding your financial network. You list down all your assets, the value, you look at your liabilities. And I think for people who joined episode 4, I actually kind of showed it to you and how it works. So you want to do that wealth plan yourself. But if you want to sit down with an expert like myself or any other wealth advisor, then you pay for it, right? So you can do it yourself or you can pay for it. And if you want more information, you can ask us about that. The third thing I said, everybody who joins in, I would hope they start having an investment account, be it a money market fund, be it even if it's the money X fund, be it an equity fund or a balance fund. Again, depending on where you are, you need to be able to actually have an investment fund. Because if you're not investing, there's no way you can create wealth. We are here because we are talking about wealth, 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 and creation of wealth. The only way you can start creating wealth is if you start saving, then you invest. And when you're investing, you have to look at a diversified portfolio. So those are the three things that I hope you get out of this conversation with Anka. I'm very excited that you were able to join in today. For those of you who joined in on Facebook, for those of you who joined in on Zoom, appreciate it. There are others who will be able to watch these videos later on. And the goal, like I said when I started, was to help you guys create wealth. And with that, I always say every good thing has an ending, and then so that you can move on to greater things. So be on the lookout. In August, we'll be having business conversations with Gaitha, because again, I'm very big on business, because especially for us in Africa, I always say the only sustainable way to eradicate poverty on this continent is through business. So I'll be talking to people about how to have scalable business, how to prepare to access funding. I'm a banker by profession. I'm an investment expert. I know the system of money. So I'll be sharing some of that information. Like I said, just an hour, and an hour goes fast, but the goal again is to share this information. But I do have trainings whereby it's more in depth. This is very high level, but you want to actually go in depth, and that's when you will be able to pay for that. So as you go along, be on the lookout. We'll be sharing this information. You can follow me on social media. My handle is @AnneGaitha, ANNEGAITHA. I'm on Instagram, Facebook, LinkedIn. I have my YouTube channel. Yes, so we're on social media. Also, my company, Regal Africa, is @Regal Africa, REGAL, Africa, AFRICA. And again, if you follow us on those two handles, you will be able to get all the information that you need to then make an informed decision to then now work with an expert who can be able to help you with that. And so with that, I'll just go ahead and just give Victor maybe a few minutes to give your last remarks before we end this wealth conversation with Gaitha. So go ahead, Victor. Oh, you need to unmute.
Okay, done.
Go ahead.
Yeah, so thank you very much, everybody, for taking your time to listening. I hope we've gotten some insights, but like I told you, more research before you commit. I would invite people to come and learn more about Mansa X. I'm sure you can be able to reach out through Anne and send more information about it. And then you can be able to make an informed decision, because you will have actually looked at other asset classes and how well your portfolio is diversified. We are actually located on Jacob Towers, the former ICE building, 16th floor. You can always reach us out. I'm on LinkedIn as Victor Marango, and Twitter is VM Marango, V Marango, capital V, capital M, V Marango. You can be able to actually follow what we basically do. Standard Investment Bank is actually across all channels, all social channels, and you'll be able to follow and get to understand. I can share all our social media links through Anne, and everybody will be able to actually go and make an informed decision. So information is power. When you have the information, you'll be able to make informed decision. And financial matters, everybody keeps learning. Actually, everything in life, what you thought you knew, you keep discovering new things. So be a lifelong learner, always embrace continuous learning. Yeah. Thank you so much, Anne, for hosting us.
Thank you, Victor. Information is power, and I always say knowledge is key. I love to learn, I love to read, and then I also love to share that information, hence why I do what I do. So thank you for stating that information is important, especially when you're making financial decisions. you have to make the right decisions with the right information. And since we can't know it all, go to professionals who can assist you with that. I do hear Cindy on Facebook says, thank you very much. Very useful information. You're welcome, Cindy. And I hope you continue to follow us and also watch more of our videos, because again, the key here is for you to get wealth knowledge that will help you create wealth. I also see here Wandai says, thanks, Victor, for all the information on investing, and thank you for the 9 weeks of wealth conversation. You're welcome, Wandai, and I appreciate you for joining in and just learning. I've been telling people this is the time to listen, to learn, and to level up. We've just seen that the lockdown has ended, but I keep telling people you want to still be careful. The time we've had the last couple of months was a reset where we needed to be thinking, reflecting, re-strategizing. We are going into a new normal, and this new normal things will be done differently. So for all of you who've taken the time to actually listen, learn, and level up, you will be a lot better than people who are probably just sitting somewhere, just relaxing and not doing anything about this time we've been given to actually sit down and really think and get enough information. So with that, I would say thank you all for joining in. I see more people that speak. I see here Joe says thank you for your information and guidance. You're welcome, Joe. Thank you for joining in. I see Alice Kemei says thanks, Anne and Victor, for the informative session. You're welcome, Alice, and thank you for joining in. I also see Victor says more welcome, everybody. So Victor, yes, I should have read it before I talked it out, but I
Yeah.
like to speak. So, but anyway, thank you all again for joining Wealth Conversations with Anne Gaitha. It's been my pleasure to share this wealth information with you. It's been my pleasure to actually help you. And I keep saying this information for me to help you and your family. I'm all about family wealth. I keep talking to people about creating generational wealth. So I hope this has been a blessing to you. For me, it's been really great to actually share this information. And like I said, if you've missed some of the episodes that I've done, because this is the 10th episode, you can actually just go online and see all those episodes. I would encourage you to share that with family and friends of like mind. You know, those ones where you can have really good conversation and say, you know what, I want to make money. Are you coming with me or not? Those are the people you want to share these videos with, so that then you can have those very interesting conversations about how do we take it to the next level. The world is coming to Africa. We are in Africa and we're not taking advantage of these opportunities. The world is coming to Africa. What will you be doing, right? What will you be doing? And if you do not know, there's always somebody somewhere who can assist you. They're professional fund managers, they're professional stockbrokers, they're professional investment bankers, they're professional wealth advisors like me. Go out there, find these people, and they will assist you. I see Teresa saying, excellent session. I shall reach out, and Victor, brilliant. Thank you very much, Teresa. And with that, I'll say thank you again for joining Wealth Conversation with Anne Gaitha. I wish you all the best, and God bless you. Bye-bye. Bye-bye.